All right, let's just jump right in. Have you ever stopped to think that maybe, just maybe, everything we've been taught about financial safety is, well, completely backward?
I mean, what if the safest place to put your money is actually in the riskiest sounding ideas? What if those things we've always called speculative gambles are turning into the most secure spots when the world gets, a little shaky?
So, to really get why that question is so important right now, we got to take a quick look back. We need to understand the old playbook, what investors have always done when things get choppy.
And that playbook has a name, the flight to safety. It's a classic move. The moment the news gets scary, investors yank their money out of the stock market and sprint towards things that feel solid, dependable, like gold or government bonds, the safe stuff.
But something just happened. Something that didn't just bend those old rules, it absolutely shattered them.
So get this, there were some renewed tariff threats, right? And just like you'd expect, the Dow Jones dropped over 250 points. Totally predictable. But here's where it gets weird. At the exact same time, while the old guard was falling, the AI chip giant NVIDIA was hitting a new record high. And Bitcoin, it surged past a mind-blowing $118,000.
So, what in the world is going on here? That's the real puzzle, isn't it? Why, in a classic flight to safety moment, did investors run towards the very things that are supposed to be the absolute riskiest?
Well, the answer, it seems, lies in a complete, total inversion of what safety even means anymore in our economy.
And this brings us to the core idea of this whole explainer. It's the thesis that innovation itself is becoming the new safe harbor. It's like someone took the old investment script and just flipped it completely on its head.
And this really radical shift, it's not happening in a vacuum. It's being powered by two absolutely massive technological forces. So let's break them down, one by one.
Okay, first up, artificial intelligence. You see, for big companies, investing in AI isn't some aggressive, risky bet on the future anymore. No way. It's become a defensive move. It's a survival tactic, a safety valve, really.
Here's the metaphor that really hits home. Think of it like a corporate arms race, right? If your biggest competitor is using AI to slash costs and protect their profit margins, and you're not, you're going to lose. Simple as that. In this new world, the biggest risk a company can possibly take is just sitting on its hands and doing nothing.
All right, that's driver number one. Now for number two, Bitcoin. Bitcoin is quickly changing from this niche digital curiosity into something that looks an awful lot like a modern-day gold rush. And hey, don't just take my word for it, the numbers are screaming it. This year alone, spot Bitcoin ETFs have pulled in 70% of the investment flows that used to go into gold ETFs. I mean, think about that. Investors are literally voting with their wallets, and they're choosing Bitcoin as their new hedge against all this economic instability.
Okay, I can hear you through the screen. AI, Bitcoin, isn't this just the dot-com bubble all over again? And you know what? That is a totally fair question. So let's tackle it head on and see why this time really is different.
See, back during the dot-com bust, you had way too much money chasing these big ideas that the tech just wasn't ready for. The costs were absolutely astronomical, and the basic building blocks, stuff like the cloud, they didn't even exist yet. Today, it's a completely different story. The tech is mature, it's ready, and most importantly, the costs, well, they're in a free fall.
Just to put this in perspective for you, let's talk about the AI model that powers ChatGPT. If you had tried to train that thing back in 2015, it would have cost you an estimated $800 million. Fast forward just 5 years to 2020, when it was actually built. That cost, it plummeted down to about $5 million. I mean, that's just an incredible drop.
And today, if you wanted to train that exact same model right now, we're talking less than $500,000. It's insane.
Let that sink in. That's a 70% cost decline every single year. That's more than twice as fast as Moore's Law, which has always been the gold standard for tech progress. So you see, this isn't some bubble built on hype. This is an accessibility revolution, built on real, powerful, ready-to-use technology.
So, let's bring it all together. What is the big takeaway here? What does this great inversion really mean for you, for me, for all of us?
Well, here are the key things to remember. 1. The whole definition of a safe asset is changing right before our very eyes. 2. For companies, innovation isn't just about playing offense anymore. It's become the absolute best defense.
3. These collapsing costs mean tech like AI is a stable foundation, not some wild gamble. And 4. Digital assets are being treated as a serious new tool for hedging against uncertainty.
And that leaves us with one last big question to think about. If technology is really becoming the new safe haven, then what's the most dangerous risk you can possibly take? Maybe it's just standing still. By the way, if you want to dig a lot deeper into this, you can find the original source for all this analysis right in the description of the video. We really hope you enjoyed this explainer from What Bitcoin Taught Me. And hey, make sure to follow, like, and share the podcast. And you can follow us on Twitter, /X, Nostra, Blue Sky, Threads, Instagram, Facebook, LinkedIn, Spotify, YouTube, and yep, now